Good morning, everyone, and welcome to the Crypto Insider channel. I am the Crypto Insider, back with another cryptocurrency video for you today. It is March 31st, 2020, and hopefully today we have some better audio for you than what we put out yesterday. I do a whole bunch of audio projects in my spare time. And so it's often I'll have different devices plugged in and things like that. So I've been unplugging all the devices, adjusting the gain settings, doing a whole bunch of different things here to try and get some better audio for you. Less snap, crackle, pop. I got a comment on Twitter and a comment on the YouTube video I put out yesterday. I apologize for the bad audio, folks. Can you please forgive me? In any case, we'll work through it. It may be that I need a new laptop. You know, it's funny. I went video after video after video with no complaints, and then just out of nowhere, a setting must have got changed or something. And now I'm having these audio issues. There is no mic cable, by the way. The mic is a Bluetooth wireless mic. So a lot of people are saying, check the cable, check the cable. There is no cable, folks. So but we will get it figured out one way or the other. It may be that I actually need to buy a new laptop here. I mean, the one I'm using is from 2017, so I imagine there could be quite a few upgrades that would help me. In any case, today we have a few stories. One, Binance to acquire CoinMarketCap in $400 million deal. Then we have an article on taxes. You know, it's everybody's favorite time of year, tax time, where we all get together and sing praise to the IRS on April 15th. Now, I'm not sure if they've extended that tax deadline this year due to the COVID thing. It wouldn't surprise me if they do. So that may be something to look into or look for if you're looking for an extension. You may not even need one this year. And I'm also going to talk about a tax that a lot of people don't talk about when it comes to crypto. So you're going to want to stay tuned for that. But before we get into all that wonderful stuff, if you're new to the channel, what you're seeing on the screen is the daily donation we make to @GoodXRP. We send some XRP to charity for each new subscriber to the YouTube channel, just as a way of saying thanks to the crypto community, helping @GoodXRP accomplish the charity mission for these 9 different Twitter handles. All good places. Dog rescues. Who doesn't love dogs? If you don't love dogs, please unsubscribe to the channel and block me. Clean water. There's St. Jude's is in there. Homeless vets. I mean, even if you don't like dogs, I'm sure there's one charity on the list that you'll agree with. So we're doing that, and it helps us get subscribers. It helps them get their mission accomplished. Going into, and before we get into this, especially today with the content that I'm putting out today, I'd like to say that I'm not a stockbroker, financial advisor, financial planner. I'm not a bookkeeper, and I'm not an accountant. I have no tax background. My background is entirely FinTech. For the purposes of these videos, and I am certainly not a tax advisor either, but we're going to cover an article that does reference taxes. So do your own research and talk to your own people before you start signing forms and buying things based off of some weirdo on the internet that apparently sounds like John Malkovich. So let's go to Live Coin Watch and look. We do have some slight gains over yesterday. Nothing groundbreaking. I've seen XRP 17.177. Let's actually refresh it and see if these numbers change any. Let's look at our Bitcoin dominance, 65.5%. So no big changes really there from yesterday. $0.176 is where XRP is standing, up 1.91% from yesterday. Bitcoin, modest gain of 1.38. Nothing to write home about. Looking down the top 10, the biggest winner appears to be Bitcoin SV. So we're nowhere near that 4% gain that they saw yesterday. But I do believe we are holding above some key resistance levels for XRP. Um, and I think one of those resistance levels is 16.5 cents. So that's a level to keep your eye on. Hopefully we break out above it. Chainlink's up 1.02%. And looks like Tezos is down 0.4% from yesterday. One of our other positions, newer positions, Hedera Hashgraph, is where is it on the market cap? 37. Here we are, up 1.39% in the last hour and 1.39% since yesterday, sitting at 3.2 cents. So it's going to do its thing. I am very cautiously optimistic with this coin. I want to see if it continues its rise further up the market cap, especially as more and more exchanges start to list it. I'm going to have a swig of coffee in a very unprofessional manner. Bear with me, folks. Well, this isn't a newscast, this is more of a podcast. Like, hey, I'm talking to you about crypto, just like if you were sitting in my living room. Um, but I mean, the first thing I would say if I saw you in my living room is, "What the hell are you doing in my living room?" But after that, we could talk about crypto and drink coffee. Um, Coinalyze.net shows our XRP price sitting at 0.17703, so they must be using a different exchange. Everything turning pretty much green over the past hour. We have some red. It looks like we may have seen the high of 0.178 in the past hour. Um, so we're down just a little bit, but nothing to indicate a huge drop or anything like that is coming. Most of the indicators or oscillators down here are overbought. These would be the strength index and the scholastic K. The moving averages are all pointing green right now, so there must be some buying pressure in the market right now. So that's good, but again, nothing to really write home about. This article from Decrypt by Tim Copeland says Binance to acquire CoinMarketCap in $400 million deal. Is CoinMarketCap really worth $400 million? I wonder where their revenue comes from. I'm not even sure exactly what CoinMarketCap does. Simply ad revenue? The largest crypto exchange is set to buy the largest crypto data site, but is that good for the industry? And then they go on to say that Binance is reportedly set to acquire crypto data marketplace CoinMarketCap. The deal is estimated to be worth up to $400 million. According to a report from the block, Binance is in the final stages of making the deal happen, which will be announced later this week. And then it talks about some of the other things that Binance owns. It owns DApp Review, Indian crypto exchange Wazir X, JEX, a crypto exchange for futures and derivatives trading, which is probably a good buy, especially as regulatory clarity comes into the market. I think we're going to see more futures and derivative style trading, which is a huge market. It's way big, above, far and away more than cross-border payments, remittances. How will Binance's deal affect the crypto industry? With Binance as one of the biggest crypto exchanges and CoinMarketCap the biggest data source, the potential acquisition could make the industry more centralized. Jonathan Ling, co-founder and CEO of BTSE Exchange, told Decrypt if Binance controls the most well-known third-party tool used by users around the world, this is clearly a strong conflict of interest. Possibly. I mean, if they're modifying content to benefit one coin that's more profitable for Binance than another, yeah, that would be a conflict of interest. Other commentators were similarly worried. Personally, I am always skeptical of any deal that can in any way affect the neutrality of any reporting system where one party even potentially has an interest in that system is here, especially as I'm not even entirely clear what they stand to gain precisely. Um, and Twitter, the response was also skeptical. Who would ever trust CMC after this? Doesn't make sense. A stake from Binance might likely work better than an acquisition, just defeats the purpose of having a balanced and neutral index aggregator. CoinMarketCap, I don't think you can even call them a balanced and neutral index aggregator as it is. I think Ripple's fighting with them all the time in how they compute the market cap of XRP. There's been a lot of discussion back and forth, and I think CoinMarketCap's one place, and there's some other place that Ripple isn't very happy with their formula and the numbers that they're putting out and using. So already, there's before the acquisition, there's some when it comes to XRP, there's some you know gray areas around uh, CoinMarketCap before Binance is getting into the mix. I don't know. I don't go to CoinMarketCap for a lot of data. Sometimes I'll go there for historical data or historical figures, but in my day-to-day research, I pretty much avoid CoinMarketCap anyways. So let me know in the comments. Maybe you like them. Maybe you use them for something. I know that they have a link to the discussion boards, and I think that could be helpful. But at the end of the day, like I said, I'm not relying on a lot of information from them. So our tax story with our April 15th tax deadline, unless it's been extended, and I'm not aware of it. 5 tips for minimizing your Bitcoin and crypto taxes by David Kemmerer. 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 I don't like that double ERER at the end of his name at all. In any case, let's go down through and read the various headlines. W-2s and 1099s have been sent out, and tax season is officially in full swing here in the United States. For those operating in the world of Bitcoin or altcoin investing, this time of year can have added stress, as reporting gains and losses for your crypto trades can be a cumbersome task. While the reporting can be difficult, there are many things you can do to help minimize your Bitcoin and other cryptocurrency gains, and in turn your tax liability. This article discusses a few of these tips and tricks. Okay, so first is to open a crypto 401k or IRA retirement account. Now, there's a lot of different types of IRAs. 401k is pretty much a standard plan ran by an administrator for a retirement account, mostly through your employer. Now, if you were self-employed and buying a retirement or investing for retirement on your own, chances are you would go for an IRA, either a traditional or a Roth IRA. But money up to a certain limit placed into these types of retirement accounts are tax free. 401k, the only taxable events are when you withdraw. And sometimes when you withdraw, there's a huge penalty if you're under 59 and a half. Now, I believe both of these types of accounts have what's called RMD, or required minimum distribution, meaning when you get to the age of 70 and a half, you have to take out a specified portion. You can't leave it in there forever because the government wants your tax money. But I think some of the RMD requirements have been waived this year due to the COVID-19 issue. I think that was part of the stimulus package. Look into using a specific identification costing method. After the new IRS cryptocurrency tax guidance came out in 2019, it clarified that specific identification costing methods could be used when calculating your gains and losses for your cryptocurrency transactions, provided that you had records to specifically identify your crypto. They're saying it sounds a lot more complex than it is. But pre-2019, Bitcoin and crypto investors were using the first in, first out calculation, meaning when I calculated a sale of crypto, if I sold one XRP today, it would be the oldest XRP that I bought, the first XRP that I bought, and you would do this to try to get over the year holding period, because the way capital gains work is there are short-term capital gains that are less than 1 year, but if you hold for more than a year, then you get long-term capital gains, which is at a lower taxed at a lower rate. The new guidance makes this clear specific identification as a great way to reduce your gains. And using this strategy, you want to specifically identify the sell the cryptocurrencies that you bought at the highest price first. For active traders, this slight change can lead to huge tax savings. Yeah. Because if you ever made some bad trades and you bought at a higher price than what you're selling at, you're actually showing a loss rather than just selling the first in. So instead of being first in, first out, this is highest in, first out, and last in, first out. However, before you can use a specific method, you have to be able to specifically identify a unit of cryptocurrency as the IRS outlines. To specifically identify a unit of crypto, you must have records of the following information: the date and time you acquired it, your basis and the fair market value of each unit at the time, the date and time each unit was sold, exchanged, or otherwise disposed of, the fair market value of each unit when sold, exchanged, or disposed of, and the amount of money or the value of the property received for each unit. Here we just talked about this holding longer than 1 year, and the purpose, of course, is to get into a long-term capital gain situation rather than a short-term capital gain. That way you're taxed at the lower rate. So unless you have a huge emergency, if you're planning on selling some crypto to buy a boat in September, but you notice that by holding it one more month till October, you go over that year threshold, you would rather sell it in October than September. Invest your crypto capital gains into a qualified opportunity zone fund. The IRS defines an opportunity zone as an economically distressed community where new investments under certain conditions may be eligible for preferential tax treatment. Put simply, the communities on the receiving end of these funds benefit from revitalization while investors gain tax benefits from investing. When an investor sells an asset that produces capital gains, he or she can roll any amount of the gain into an opportunity zone fund within 180 days of the sale, so 6 months. The investor can then defer capital gains taxes on that amount until December 31st, 2026, or until the fund is sold or exchanged, whichever comes first. So if you have a large amount of capital gains, way more than you need, you can invest into one of these zone funds. I'd be leery. I'd definitely be talking to an investment advisor before I tried that strategy, because you may have done all this work and held on for so long, and now you put your money in that you worked so hard to get into a flopping investment. I don't know that there are any guaranteed returns on an opportunity zone fund. I don't understand opportunity zone funds. I don't have any. One of the best ways is to use cryptocurrency tax software. Obviously, if you're a trader, you're going to have to do this unless you are insane and you want to try to do each one of your trades on an Excel spreadsheet and you have a method of doing it. That's fine. I used a cryptocurrency. Actually, you can just download. Most of my transactions were in Coinbase this year. So I was able to just download their reports and upload them in TurboTax, and it did all the calculating for me. So hey, I was happy with it. There, I know there is. I forget the name of the site I was going to sign up for, but some of its tax preparation is. I think it's cointracker.io. Some of its tax preparation stuff is expensive, and it was pretty much free to just upload the reports from Coinbase. But if you're uploading reports from an exchange, make sure you get all the exchanges you're on. That way you're not missing or under-reporting. The IRS certainly doesn't like that. And more coffee. Okay, so one of the things that I want to make sure my audio is still recording too. Uh, One of the things not covered in this article, and it's something that's going to apply, and nobody talks about it. In the event of your cryptocurrency mooning, let's say we wake up tomorrow and XRP is $200 a piece. Okay, so now a lot of people listening to this, including myself, are multi-millionaires. One of the things you're going to be tempted to do, and one of the things that's going to happen if you let anyone know that you're a multimillionaire, is they're going to ask you for some money. And you cannot just give money to people uh, to be nice without there being any sort of tax consequences. So, what you're going to run into really quickly in that scenario is the IRS if you're here in the US. Now, if you're in other countries, I'm not sure how they do gift taxes. But if you're in the US, you have you can give up to $15,000 a year to somebody. You get an annual $15,000 exclusion, which is a pretty good sum of money. But you got to remember that's not just cash. If you buy someone a car that's $30,000, you could end up owing, $15,000 worth of taxes and gift tax. And the gift tax is paid by the donor, not the recipient of the gift. So it will logically be upon you to pay those taxes. Now, all is not lost because, in addition to the annual exclusion of $15,000, a lifetime exclusion is also in play. You get a one-time lifetime exclusion of $11.58 million. So, if I did buy you a $30,000 car, the $15,000 of it would be taken up by the annual exclusion. Then $15,000 would be applied to the $11.58 million lifetime exclusion. So I could theoretically end up not owing any gift taxes on it. But if you're a multi-millionaire several times over and you're going to start divesting yourselves of millions of dollars, I'm going to give 5 million to my sister and 10 million to my parents, you're going to hit that lifetime exclusion very quickly. Now, I know that it should be a problem that I have, right? It should be a problem that you have, worrying about hitting the 11.58 million lifetime exclusion. I'll take that as an issue any day. But I just want to say this is a tax that's out there and kind of hidden that no one talks about when it comes to cryptocurrency. And so to get around this tax is if you buy a Ledger Nano or some sort of cold storage wallet and you load it up with 10,000 XRP, give it to your give it out as a Christmas gift or whatever now while XRP is at 30 cents or 17 cents. If you give 5,000 XRP now, you're going to come nowhere near even the annual exclusion than if you wait to give it until it's $200 a piece. Now, can your greedy, unwashed relatives be counted on to not spend the cryptocurrency and to reliably keep it and hold it until it is worthwhile? Only you know the answer to that question. The Crypto Insider doesn't have that sort of insight, but it definitely will help you out with the gift tax when it comes to it if you say, no, I gave this cryptocurrency and access to it to this person when it was 17 cents, not when it was $200 a piece. So you may want to look into that as a tax strategy. I certainly would if I was planning on giving away any amount of XRP. But anyway, that's it. I'm running kind of long today. I hope the audio is better, and I hope you like my video. There's my music. I'm going to pop up some additional videos so you can continue your Crypto Insider journey. I thank you for watching, and I will most likely see you tomorrow.